Good morning, Sean.
Hey Nico, how you doing?
I'm doing fantastic. I've started or restarted the recording. So we are. Uh, I was basically speaking about the most recent announcement. So the announcement came through a few minutes ago. So I did that introduction. It's a 50 basis point reduction, which was similar to the October 23rd announcement. So another huge reduction. I wanted to invite you on to the podcast episodes to hear your thoughts. Was this expected? And where do we go from here moving into through the winter market as well as the spring market, which is expected to be extremely heated?
hmm well, I think where we are now, I mean, 50 was certainly expected by somewhere around 80% of economists had expected a 50 basis point rate cut. And so I think that the Bank of Canada just looked at what the market was expecting, looked at the slow growth in GDP, looked at our very high unemployment numbers, and decided a 50 basis point rate cut was warranted. Me personally, I was thinking that they would do 25 basis points. I was on the a little bit on the fence with, do they need to do a full 50? But for me, it was a close call. But if I look back at what I was predicting 3 months ago, it was 50 in October and 50 in December, and then keep going into January and March. So, not up close and right on the eve of the decision, 25 or 50, I wasn't sure. If I look back at where I was, hey, I was right. I was right 3 months ago.
Correct. Um, yes, I think that because the bank is really we're at the level of inflation where the bank wants to be. Even though there was an uptick towards the months of September and October, I think that the bank is still um, looking at it from a positive perspective, even though there was that slight uptick in inflation. I think that by next year, mid next year, I think they want to still reach their target of 2.5%, is what I've been reading and hearing. And I think they want to reach that target by making these significant cuts. So the
Mm-hmm.
next announcement is January 29th. So what are you thinking that will be?
At this point, I'm expecting a quarter
Yeah.
point. I think the 50 basis point cuts are behind us now. I think they've caught up to where they feel they should be. A couple of points with that, like the U.S. Federal Reserve is only expected to cut by 25 basis points on December 18th. Their inflation has not fallen as rapidly, and it probably wasn't expected to. If we look at their how sensitive the U.S. is to interest rates compared to Canadians, our inflation falls a lot faster because we've got the big tool of policy rate that will lower variable rates, and we're not in these 25 or 30-year mortgages, so we haven't locked in a lower rate. So we're much more susceptible to those policy changes, which will affect our behavior more quickly and then lower the Canadian inflation rate. So I'm expecting 25 in January, maybe another 25 in March, but a lot of it really depends on what happens with our inflation numbers. It's been, although it is down at the policy level, it's on the lower end of the policy level. It's at 2%, and it really hasn't gone down in 2 or 3 months at this point. So we get that number next week. It really would be ideal if we had that number in advance and then made the policy decision. But I guess those two things are not aligned, and
Right.
we're not getting those.
Well, you mentioned that this rate or these rate cuts affect the variable rate. I think that's an important point. A lot of people think that the rate cuts affect all mortgage rates. So, can we talk about the difference between variable rate and fixed rate? And what are the factors that affect the fixed rate mortgages? And where are they at this point in time?
Yeah, well, so variable rates are affected by the Bank of Canada meeting that we had today. So as the Bank of Canada moves the policy rate, their what's called their overnight lending rate, that then affects the individual banks' prime rates, which they lend out their money at. So variable mortgage rate is kind of the most famous and obvious example of that. The fixed rates, they move a lot more frequently. Although you lock in for a term, say 1, 2, 3, 4, 5, 7, or 10-year fixed rate terms, those rates go up and down a lot more frequently. What you can lock in at based on bond yields, and a big one is the U.S. government bond yield, or the 5-year. And so when that 5-year bond yield in the US, basically how well is the economy doing? What are they expecting the economy to do? That affects the US bond yields and then affects our fixed rates from there. So there is some nuance to that, but an overly simplified view of it is that Bank of Canada affects the variable rates, and the fixed rates are more of a national or global view on what's happening with the worldwide economies, and the U.S. dollars, the U.S. economy is a big piece of that.
Well, we're still seeing that the overnight lending rate is on a downward trend. Are you saying that, or are you seeing that the fixed rate has bottomed out, or are they still heading downwards as well?
Well, I don't think so. Where we were, they actually came up about 25 basis points. Fixed rates came up about 25 basis points after Trump made some threats. I'm sure you heard about this, the
Yes.
the 25% tariffs. Fixed rates reacted by going up, and a lot of banks started raising their rates. That being said, we've given all of that back. The bond yields have come back down, and we're expecting now there's a little bit more margin, and fixed rates will come back down to where they were maybe 2-3 weeks ago. I
Okay.
don't see a lot in the near term. I don't see fixed rates dropping any more than that. I don't expect them to continue dropping into the 3%. I think in the mid fours or low fours is really where we'll be for the foreseeable future.
Okay.
But
Okay.
we'll see.
So there have been other important changes in the world of real estate. One being the change in the mortgage rules. So today's December 11th was an important date. The next important date will be December 15th, when those new mortgage rules kick in. Can you give us an overview of those changes?
Sure. Yeah. So I guess the big one is that um, the minimum down payment is decreasing for purchases between 1 million and 1.5 million. So if you are purchasing a property, historically, if you were purchasing a property a million or more, you would need 20% down payment, which at $1 million, so at 999 was $74,999. At at $1 million was 200,000. So it's another $125,000 more for that extra dollar to get over $1 million. So a big reaction is going to be that glass ceiling, that $1 million glass ceiling, I think will be broken, especially here in the GTA, where we have a lot of properties that are listed in and around the 900, 950, and that's a marketing price because a lot of people can't go above that $1 million. But now you need 5% of the first 500,000 and 10% of the balance. So instead of at 999, you need 74,999. Now at $1 million, you just need 75,000 as your down payment, and so it's 10% of every, I guess, of every dollar that you go above the 500,000 is what you would need for the down payment. So yeah, it allows you to get to like wish I had the number top of my. Okay, so yeah, so at 1.5 million, it's 125,000 is the minimum down payment, which opens the door for a lot of buyers.
Yeah.
Police officers and teachers, 2-income home families who don't have generational wealth, they can now get into the market without into an average home in the GTA, I should say, without $200,000 or $250,000, which is not attainable for most people.
Yeah, I agree. I agree. There was another change in terms of mortgage amortization.
Yes. So now, if you are a first time home buyer, you can get a 30-year amortization. And that might just sound funny, but the previous thing was 25-year amortization. And so at 30-year amortization, you're going to pay off the mortgage for longer, but it allows you to stretch your budget more up front. You can essentially have lower payments, which allows you to borrow more as a percentage of your income. And now that's beneficial for people without 20% down. Up to, as a first time home buyer, if you can buy up to, I guess the big change is if you're a first time home buyer, you can buy up to 1.5 million with a
Right.
minimum $125,000, and you can get 30-year amortization. So it opens the door for more Canadians to be able to purchase, especially people in the GTA, to be able to purchase between 1 million and 1.5 million
1.5.
that would have been off the table before.
Yeah. It's obviously beneficial for first-time home buyers because they can purchase any class of real estate and have that 30-year amortization. But all buyers are also able to get the 30-year amortization when they are purchasing new builds. Is that correct?
Yeah, that's correct. So you
It's
can,
all
yeah,
new, yeah, new homes.
I think it's
So,
a smaller group of people,
yes, yeah,
but
yeah.
we
But
want to encourage more building, and by allowing more people to be able to afford new builds, that opens the door for more investment into new builds. But I think
yes,
it's a much smaller market than first time home buyers.
yes, yes, correct. Okay. Thank you for your insight, as
You're
usual.
welcome.
Very much
Absolutely.
appreciated.
Happy days with a
I
50
know.
basis point rate cut, right?
Yeah, yeah, yeah. There were so many changes over the last 75 days, 75, 80 days. So it's good to have your perspective on some of these changes and where we see the market heading as we go into 2025. I suspect there will be, as I mentioned at the beginning, there's going to be much more activity as a result of these changes and a result of the lower variable rates, at least. Now, that's like a double-edged sword because as interest rates decrease, there's more activity, there's more interest, more competition for what's available in inventory, and that inevitably leads to price increases. So it'll be interesting to see how that will affect purchasers' decisions. I always stress that early adopters are the ones that benefit the most from these changes, the ones that are quick to take advantage of these changes. So we'll see if how that plays out over the next few months.
For
Thank
sure.
you.
You're welcome.
Thank you
Thanks for
again.
having me.
Yeah, and we'll talk soon.
Thanks a lot. Talk to you later,
Ciao.
Nico. Bye.
Ciao. So that was Sean Humphrey from Dominion Lending Centers. That was his take on the most recent Bank of Canada announcement. It was once again a 50 basis point cut to the overnight lending rate, and as he mentioned, it affects variable interest rates and not fixed interest rates. Those rates fluctuate more frequently and are affected by the 5-year U.S. bond yield. So they're currently hovering around 4.25%. And he mentioned that we've probably seen their lowest point. So I don't think we'll get to 3.5 or 3.75% points, but it's a possibility. But I think we're more or less around it'll hover around the 4% mark for the foreseeable future. That concludes this episode of Brick by Brick, Building Wealth Through Real Estate. You will have all of the information in the recap and the transcript. My contact information is also available, and you can also reach out to me through the various social channels. Ciao, ciao.